Welcome everyone to our LITT trading session, LITT support session. Just doing a quick sound check to start. Please type in Y in the box if you can hear me fine.
Why not yes?
Or yes, however you like to do it.
Such an abbreviated man.
Just gotta get the message.
You can
put in the letter L if you wanted.
Why? L for what?
L for love.
L for losing as your thing's dropping. Nice one, Rowan. Righty, can do that.
Perfect. All right, so we'll start with the disclaimer here. Any advice contained within this presentation is general advice, does not consider your objectives, financial situation or needs, and you need to consider whether it's appropriate to you, and of course past performance is not an indicator of future returns.
Good work. Guys, just really quickly, so Patrick couldn't make it in the last minute. I've got to run out. We've got some stuff going on. That's some exciting news that we're trying to announce as quickly as possible around some of the changes to our services and improvements and what like. But we're just dealing with some of those bits. If you guys have any questions, please put them on now. If you want me to answer anything, otherwise it will be Tim answering those. And we all know that, of course, my answer is so much more valuable than yours. I'm kidding. Any particular trades that you guys want us to look at? We're getting to the stage now. It looks like some of these lead longs are starting to eventuate. I think everybody can see the screen, which is good. Do we have anything come up today?
Yeah, we had Ramsey Healthcare for an iron condor again.
Good
this has
old
come up
Ramsey.
a couple of times over the last week.
Ramsey, sorry to say iron condor.
For the iron condor, yeah. For LITs, we have had JHX appear several times, and we've had a few that are getting quite close. LLC and Macquarie, I believe, were getting close earlier in the week.
Yeah, you go. 1811 for LLC. That's actually lining up quite well, close to the 50-day moving average. We might actually, why don't bring it up? Because we did look at this yesterday at the options game webcast. We are using the options game screens while we're in the last week of our options game. So that's the 1 year. That's the 1811 pop right there. I'm taking 1809. So we actually did pop it really quickly. So that's looking quite nice. Maybe we get one of these nice moves for those that do it. But most importantly, the thing that we were looking at yesterday, I'm just going to click and drag this across. That's 17 is where the stop is roughly, which is in line with where that support is. So it's in terms of technical, it's lining up quite nicely, not too far away from the 50-day moving average, and it's been on a bit of a move. So some long-term fundamental buying. So Ramsey said is 70 points today, so that's interesting. It's starting to get up there. I don't know if anybody got onto that. If anybody does want to get onto that Ramsey, you can do up a market maker price, so let us know. We are, for those of you that have been listening, we are getting closer and setting up our WhatsApp group. Last couple of stages, last internal training, internal testing, working out through the mechanics, so we should hopefully get that out sooner rather than later. In terms of the market itself, probably sick of me saying this, but I mean, look at that. Talk about strong resistance there at 67.50, and then right here. And so those are the two levels that I'd be looking at, 67.50, 6,500 at the moment. You get your for a weaker move. That's starting to line up, so you got some support there. You got the 200-day moving average. You'd want to close people over there to have some kind of confirmation around downwards movement. Otherwise, in terms of what the market is doing at the moment, you're looking at what the US is generally doing, and it's pushing higher. The question is around how exhausted it is, whether it is exhausted. There was an article the other day that I read. I forget where now. I haven't been following the markets closely as I should have been, just because there's been so much stuff going on in the day-to-day. But the US retail market has doubled their put protections exposure, so there is a bit of fear coming in there, which is why I guess implied volatility has been really holding up despite the move higher. Still some unexpected guesses there. David goes, is XJO lining up for an iron condor? I'd look in terms of does it line up? Yeah, you probably could say that it's from a non-rule point of view, not a kind of a LITT iron condor point of view. Yeah, it's definitely range bound. The reason why I would probably steer clear of it is because it's been consolidating since August, and really if you look at where the market's been, I mean it's been trading in this 250 point range generally, aside from sort of a couple of outliers, for half a year almost. So it's definitely trampled on this territory, and you'd think that it's going to move one way or the other in some relatively significant way. If it's to the upside, you'd think they're going to flush out all the week longs before they do that, and this may have been it. And then you get a stronger rally going higher with sort of sophisticated money, or it is exhausted, and you probably, I think one way or the other, there is going to be some kind of a move in some direction, and to be fair, it might not be this year. For me, there's probably just a little bit too many of these underlying risks before I get into an iron condor on the XJO. But in terms of, when you talk about statistics, I guess, then from that point in time, it's yeah, I mean, XJOs have generally been good iron condors. They're generally range bound. There's the volatility is okay in that. Ignore that there's that's a game issue, but we're sitting at about 12% volatility, which is right about that average point. So it's not a terrible trade. It's probably there's probably better trades out there than that. One thing that I noticed this morning, and I'm still so sour about this because it was obviously an iron condor that we had, but it picked through that 1250. Obviously, we were waiting for that about 2 months ago. Bloody thing, but it did peek through it, so and sold off. So it'd be interesting to see if there's some follow through. You'd think that there's some up bias in that. It's just did a bit of a turnaround there in that 50-day moving average. Obviously trampled through here, and it's made a breakthrough that 1950. Coltex was another one that I've been looking at. That looks quite interesting as well from a trade point of view, because that was when its profit halved. I actually did get onto a kind of off the trading system short trade in there, and it wasn't doing anything until it did that right on expiry date. So that was quite a good spread, and it's just popped back up again. And I've set an alert, and I've actually just not done anything. And it's, again, in terms of a trade, you look at that 2750-ish level. That's really holding up around there. It's hit against that. So that's sort of, I'm not rushing into a trade there just yet, but it'd be interesting to see. I think that they're probably likely to take out the 2750, you would think, but nevertheless, this might be a good short-term kind of a November short spread type thing. So just in case they take that out and take it right back here, so something like a 2750, 2800 to a 28 type spread, just whatever it looks like from a pricing point of view. So that seems like another trade that I've noticed, and there hasn't really been a whole heap more. I mean, TWE had some moves. We obviously saw that. CIMIC had some moves, but like that's cool maybe from an iron condor point of view type trade as a neutral trade, but also the downside to all of that is that implied volatility is really still nowhere near as where it should be for a good iron condor. Last thing I'll mention before I do run off, and there haven't been a lot of questions, so I can run off safely. But there's been a couple of stocks that have popped up from an IV rank point of view. I don't really like these guys. One is that's low liquidity, and also the low number means that to get a decent iron condor on, you're actually going to pay quite a bit in ASX fees. So I generally stick to things that are over sort of $20 odd. But CIMIC Group, that's an interesting type trade. High implied volatility, right in the middle of its range. Again, if you're sort of keen on some trade ideas, that's one to consider. Obviously price it up, but it's, as you can see, this is over 90 days and it's really not being able to fall below 30. 32 seems to be the new support. You could do something around the 32, 34 range, maybe widen it a little bit. So there's probably a couple of these things, but for the majority, I think patience is still king. It's always true. The only reason you'd look at that is if you just really have a niche and you really want to get some stuff on. But in that sort of outside of trading systems, don't risk too much. Just have a small kind of trade with those if you want to. But the things that you want to look for are, as soon as there is some confirmation of a move, some strong move in either direction, you'd want to jump on that. From a purely selfish point of view, I hope that we break up to the upside. Despite everything that's going on, I think that just with everything that's been weighing down the market, if it does manage to push through the upside, we're going to have a lot of lit longs. There's going to be a lot of short covering, you would think, around the market. And I think we'd get quite a significant short-term move. So that would be awesome from a trading point of view. But from a kind of where the market's at, and just watching AGL go negative, which is interesting. Watching that close above 1950, by the way, is probably didn't mention that. But from a general point of view, the downside here is lining up really nicely. So close below 6,400 would be amazing. But yeah, you got some support there at 6,500, and the reason why that's also significant is there was some resistance around here. So interesting in the market. It's still like you look at this entire thing. We've been talking through this August, October, just terrible from a sideways point of view. Just nothing given. Just the market's given you nothing unless you've got a conviction on a sideways move, and even that would have been scary unless you're really timing that well, because it's just too choppy for an iron condor, but it's not choppy enough to be directional. So the market is what it is. I guess you can't force it to do anything. But we're sort of interesting times. Good question, Rowan. So big hoo-ha about the yield curve inversion and impeding market crash seems to have gone dead. Any new further thoughts on it? So Rowan, I think the first important thing is in terms of that is it's a indicator that tends to signal a recession sort of up to 18 months away. In terms of the stuff that is probably much more worrying from a fundamental point of view, and again, that's a long, it's an important thing to keep in mind for traders. The fundamental doesn't really matter so much unless you're doing good old catch secure puts. But from a trading point of view, it doesn't really matter much. But the stuff that you should be looking at, in particular, if you were looking to position your share portfolios as you are, I think, Rowan, there's some seriously weak economic data and contraction data that's coming out. So some kind of some scary things there. The reason why the market doesn't sell off on it, and this is the way up that you've got to consider, is because every bad piece of news leads to potential rate cuts or heightening the percentage likelihood of a rate cut in US. In Australia, obviously the same thing, which is propping up our market. There's conversations around quantitative easing because there's no wage growth in Australia for the last 300 years. Or whatever the opposition always says, whether it be Liberal or Labor at any given point in time. So I think that it's important to note some of these things because the news is so bad that it's giving way to stimulus in one way or another. So and cheap money is, I think it's fair to say now that cheap money is staying for a while. Thus you see the housing market rebound, and people are starting to buy into the future of 2.5% interest rates on your home loan, which shoot me in the head. I don't get that, but anyway, when target inflation is 3 and you can fix a home loan at 2.5, something's really wrong. WPL, Paul mentioned WPL expires tomorrow. There's an Iron Condor. What are the, you have to, sorry, remind me again, Paul, I don't have it in front of me. What are the strikes on that? Was it a 32 or 3150? Do you remember? I'll just wait for that one. What have you been looking at lately?
I've been looking at a few things. So I was in Woodside. I got out, I think we had a session and you mentioned that it was you thought it would be going down over the midterm, and I was looking more at like weekly trading.
Yeah, and you
it was
made
enough
money
to
on it.
scare me. So
Oh, did you? Oh,
I
sorry.
took my winnings and got out.
I was talking about, short-term trading, right? I was saying that, I'm talking about a much longer-term time frame than you are.
Yeah, I'm usually looking at a couple of trades in and out within a week.
Yeah, that's fine.
Just get that quick money.
Yeah,
or quick loss.
It's all you're about. Just the quick buck. Hey, look, you've had 2 very consistent games, so
yeah, it's manager skill, mate.
S32, you love it.
Yeah, this is an interesting one. I got in right at the beginning of the month. I was hoping for it to go up, and it didn't, and then it didn't, and then it didn't some more, and then it finally did. And I think I got out at the right time based on that.
Right at the 50-day, yeah.
And if we're looking at a trend line that will come down here, it will cut off the other resistance line right along here, then yeah, we'll see what happens. But it will be interesting if it can push through that 50-day moving average. Could be a bit of a, could be a breakout, but it could also just bounce straight back down. We'll have a look at,
just trying to have a quick look to see if I can find the, Tom's just asking, can you explain your entry reasoning for that?
Gambling. No, I'll
yeah,
show
nice
you.
one, mate.
I'll put the lines on the chart here. So if we do at around 240, we'll have a support line. And this is a support line that was established back in 2016 and 2017, all the way back here. So it bounced off a few times late in 2016. That bounced off again in 2017 in February, right around here. So if it was going to come all the way back down after having quite a decent rise, then the market's still going to see this as quite an important support point. And it looks like they have so far, at least.
I still, like, that to me just looks like, yeah, you got to be a much braver man than I to get into a long position there. Just
yeah, it's not long term.
Yeah, I'd be effectively caught short in that. Well, I mean, again, there was a lit short in September, and that obviously didn't work 100% well, unless you went out too far, and then when the market really sold off, but then you'd be in the second time in the lit short. Thanks, Paul. Actually, I did just look up. So 3150, 3350 on the WPL. It's 3164. I don't know what to say to you, honestly. I mean, it sounds like you're ever so nervous about that WPL trade. One thing you could consider doing if you are worried, consider rolling that 3150 down to a 31, or closing down the put spread. So that's sort of, but it comes back down to where you expect WPL to be between now and tomorrow afternoon. I would honestly, in your position, I'd stay firm and wait for the market tomorrow to decide where it is. I mean, 15 cents is, it's not a lot, but it's not insignificant either, especially considering 3150 is right there. So there's some what was it, like 3152. So like it hasn't traded below 3152. Now it could, and that's obviously why you don't have 100% of your max profit at the moment. But one way is you can, if you're really nervous about it, shut down the put spread, keep the call spread, and watch that evaporate in the last day. You probably the thing that you would look at in your portfolio right now is premium margin. So what is the theoretical price of the bought 30 that you've got in there. So if that's 0 or close to 0, which looks like that's where it's at, you'd leave that one because you don't want to pay the extra brokerage on that. And there's only a sold 15. So that's really the whole thing. Is right now you're effectively in a position where you've got a sold put at 31.50, and you've just got to make a decision now whether you're worried about that or not. So as a two ways that I would go about it, is either roll it down if you're really nervous about it, 31.50 to 31, maybe even lower, depending if you can actually get anything from the market. Close it down. I mean, you've made money on that trade, so that's one way of doing it. Close down the 31.50, leave everything else because it's probably worthless now anyway. Or you decide and you just sit on it and decide what happens tomorrow, and have a look at what your net theta is. Figure out what your what the difference is between making some of those decisions, because you might be saying that you're giving up. What do we got? If I just do this just quickly, it looks like you've got a couple of $100 in there. Just looking at your account on my phone. But make a decision whether you think it's worth it holding that or not. That's sort of where the decision comes down to. Alrighty guys, I've got to run. Any other questions? Tim can pick that up for you. Thank you so much. I'll catch you next week, and hopefully won't be so rushed.
Now we'll pull up another chart here. Let's have a look at, see where STO is today. So this has been an interesting one. Had some good news come out on this day, right in the morning, and then it's been trading up near that $8 mark ever since. I did buy a put on this one when it first came out on around this day here, the day after the good news came out, and that did not pay off for me whatsoever. So I'm still taking the losses from that position. Basically, I was looking for it to come back down to the 50-day moving average after such a quick price hike, but that did not occur. Might have a look at a couple of the big banks and see where they're at as well. See if they can give a bit of an insight on the market. So NAB's a bit above its 50-day moving average. We've got Westpac basically on that 50-day moving average. We've got CBA also on the 50-day moving average. And ANZ a bit above its 50-day moving average. So there's potential for a bit of support there with the major banks. If two of them can break through the 50-day moving averages, there's still two that will be above. And if the banks all move together, then it's likely to have an effect on the overall index. Let's have a look at BHP. So with iron ore recently just getting below that $90 mark, US dollar mark per ton, even though a lot of the iron contracts are already out and locked in for future production, it can still have quite a large effect on sentiment with the big miners. And we can see here that it is really tracking, seems to be tracking the iron ore price when it comes back down, as it did right at the beginning of August. So did the iron ore producers. A bit of a death cross here, and look like we're at the bottom of this range at the moment, with the actual underlying price of iron ore front month futures also being below its support level, or its support level for at least the last, I believe, around 6 months or so. 2 months more recently around here. We'll have a look at how FMG is doing. I think this morning these guys are doing a bit better than BHP. And they are bouncing back off the 50-day moving average and about to head up towards that $9 resistance level again. The 200-day moving average and 50-day moving average pointing upwards. And the ADX is quite low nowadays. It was up for a lot of the year. It was quite a bit higher, and now it looks like the volatility is going to be quite directionless. It could be, it's hinting that it is a bit of a random market where it's going at the moment. Was there any other stocks that anyone wanted me to look at in a bit more detail, or any questions about trading options in general? Have a look at Newcrest. So Newcrest is a bit interesting, even with the US market being slightly backwards and the Aussie market being slightly down this morning or today. It does seem to still be holding up quite poorly. So it's had a pretty rough couple of days, the last 2 days, but it is also at the bottom of its trading range and its support level, right on $32.50. Usually if there is a lot of volatility or a bit of a shock in the market, then Newcrest Mining will usually follow the gold price all the way up, as it has done several times over the past couple of months. So I've got a question here to have a look at JHX. Let's see here. So Rowan's thinking that it would line up for a short trade. It's had, when it's been initially flagged for a LITT long, it's had a lot of green in its during its trading days, all the way up, and now it's starting to show a little bit of red right at the top, but it's not significantly falling. It's just quite flat at the moment, and we've still got an increasing 50-day moving average. It's slowing down a little bit with the flatness, and the ADX is starting to drop a bit. So this is where how high it was on its way up. Quite a strong directional hint in the market, and now it's starting to pull back quite significantly. And we'll see over the coming days, it might not even be at that 20 mark. The implied volatility is still quite high, but you'd really want to have that positive direction to make full advantage of that volatility in the market. We'll have a look at the next one. AMC. MCOR. Have to have a look a little bit further out for this one. Yeah, it's interesting with this one. It does seem to be following somewhat of a range to a degree on its way up. And have a support line all the way up and a resistance line going diagonal. We'll see where it is. Fell that significantly, probably about there. Yeah, so it's interesting whether it will come back down towards this level below before it starts trading sideways again. Be something to watch for. Whether it's going to remain trading between these regions. What we'll be looking at here in the short term, the biggest obstacle is going to be first the 50-day moving average, and then we'll be looking at roughly this second resistance line along the top here. Now this resistance line, it may not be in the right spot. I've cut off a bit of the top of this level over here. But it's going to take time for the market to tell where that line really should be, how it bounces back up, and if it gets through that 50-day moving average. And then, be looking at from there, trying to push through this resistance line again if it does bounce and come back through here. It'll be interesting. Could bounce, hit the resistance line, bounce back down, trade over here around mid-November, and then bounce back up and push through again. But that's anyone's call. Could just continue trading down after bouncing off the 50-day moving average, even back down to this level down here. Only time will tell on that one. Interesting. I'll have a look at Brambles, BXB. This one's a bit of fun. So fell back in August quite significantly, started to rise quite early in the game when we would be here about the 9th of October, and seems to have broken through after hitting that 50-day moving average, pushed through, and then pushed through the 200-day moving average just this week. And now we're at the top. So what we might be seeing is a continuation of a breakout or comfortable trading within this range again. Or if it can't consolidate up there over the coming days, then it may just fall back down to this range below. Whatever happens, I believe this $12 mark will be quite important for short-term pricing. We'll have a look at Rio. Yeah, okay. Who knows with Rio? It's a bit of a death cross here. This would just be in line with iron ore prices falling around the same time or a bit previous back here. The market pulled down, so the 50-day moving average pulled down after. And now it's just going to be range trading as along with the, I'll say with the iron ore price for the most part. Let's see if we can find some support and resistance here. Really pull this up a bit. Maybe around here. That looks about right. So around 87 to 95, with 90 being a key pivot point in the market as well, right where the price is now. So it's going to have a hard time falling below this 90 level. So there is a 50-day moving average there. It does seem to be quite an important level. Same with the 200-day moving average. So you're probably looking at a bit of price consolidation around here for a short period of time until it decides which side of the moving averages it's going to start trading on. Let's have a look at AWC. much on the direction. Seems like its upward trend has ceased. And it's probably even pulling back a bit. So it's back around near its 50-day and 200-day moving averages. It seems like it is somewhat reverting around these levels. So it's now the medium term and short term mean for this stock. I'd be surprised if it really, at the moment, without some news coming out, if the market is still going sideways and just chugging along, it's probably just going to continue ranging the 50-day and 200-day moving average up and down. That's what I would see happening here. It will have a bit of a resistance shortly, right at the time when it would probably hit the 200-day moving average anyway, and then come back down and maybe continue off this $2.10 mark right here, or $2.12 mark. Depends what the rest of the market is doing, though, or if any fundamentals change. Based on this, the 200-day and 50-day moving averages, they haven't even really been that far apart based on its trading range. If it's too far from one, it'll end up just falling back down to it. That's an interesting one. Let's have a look at Telstra. So Telstra is one that it's hard to pick sometimes what's happening with it. Let's see. So it's had a long downward trend for quite a period of time, basically from 2015 really. And now it's started to have a bit of a turnaround and pick up. Telstra is one where you probably need to have a bit of an understanding as to what's going on in the media and what to filter, what is real. So there's always a lot of noise with a company like Telstra, a lot of white noise, a lot of opinions that just hold no value or don't really have any real effect on the market. But based on pure technicals, I wouldn't have a clue where this is going. So it's got an almost inevitable death cross about to appear, but it has had them in the past and it's just pulled straight back through them. Even this year this happened. And this golden crosses don't really do all that much for it in recent times either. Except for in February when it came all the way through. Bit of a good run. It looks like a bit of a downward trend. It's bouncing off the 50-day moving average at the moment. It's going to probably get squeezed in between the 50-day and 200-day moving average, at which point it's going to have to decide to trade above or below one of them. Probably expect that decision to be made probably towards the end of this month, maybe in the next week or so. Was there any other questions or any other stocks to look at? there's no more questions and nothing else to look at, I'll call the session to a halt. And if you do have any questions, feel free to drop me a line or send through a message through the chat box at the bottom of the options game and bottom of the implied volatility trading platform, and I'll be able to get back to you. And thanks, Dave. Yes, I am feeling a lot better. Appreciate your concern. And yeah, enjoy the rest of your day. We'll speak soon.